NIIT Tech has posted a flat revenue growth for the March quarter. Margins have declined in line with the industry-wide cost increases. To help us decode the numbers in greater detail, joining us now on the show is the CEO, Mr. Sudhir Singh. Agam Vakil from our research team also joins in to take this conversation over. Agam.
Thanks, Devina, and thanks, Sudhir, for joining us and taking us through the numbers. But let's start by talking about growth. It's been a strong annual growth, but sequentially, there's been a few challenges when it comes to revenue growth. Can you tell us a little more about why this is happening? What are the factors that you're attributing to this?
You're right. This has been possibly if not one of the most successful years for us as an organization. We've actually grown exactly 22.9% in reported terms and 17.6% in constant currency organic terms. This quarter, to the point that you made, we've grown in constant currency terms 1.3% quarter over quarter. Now, this is traditionally the quarter in which the GIS business, which is the business that, as you would know, we've divested at the end of this quarter. Quarter 4 used to be the quarter in which the GIS business used to do extremely well and show a jump. But this business, the GIS business that we've divested now, is a business that actually declined 15% in quarter 4 over quarter 3, largely because elections in India were announced, and that put in place restrictions on government spending. That's why quarter 4, this quarter, you see growth as being somewhat muted, though as you would have seen as a year, it's been an absolutely outstanding year for us in performance terms.
Right. So, very recently we had earnings from Cognizant, and what we saw was not only weakness, but also them, notching down their expectations when it comes to, their outlook go ahead, especially from the financial services sector. I know that a lot of these challenges were very specific to Cognizant. My question then is, what is your outlook when it comes to this specific vertical, and what can we expect going forward for NIIT Technologies specifically?
So, Agam, we operate essentially across 3 verticals, and even those verticals, we tend to be very deep and very intensive when it comes to sub-verticals within those verticals. For us, the BFSI segment is largely a play around the buy side of the capital markets. Insurance, we tend to spread across PNC, specialty, and LNA. And travel, we tend to focus more on airlines and airports. At this point in time, we believe that the fundamentals of the business, from an internal perspective to the point that you made, are strong. And we continue to believe that what we've shared with the market in the past around growth being robust, growth being predictable, and growth being profitable as well along the margin axis is something that we will continue to chug along with.
Fair enough. If you can also tell us a little more about the deal wins that we've seen over the previous couple of quarters and the kind of impact they can have on revenue growth as we move into the new financial year.
So we've signed 4 large deals, Agam, over the last 2 quarters. This quarter, quarter 4 that we closed, we signed 2, and we signed an equal number in the previous quarter. Our order intake numbers, and we talked about this, over the last 4 quarters have now touched $646 million, which is about 27% higher than the order intake number for last year. Order executable stands at $390 million this year, which is about 15% higher than the number that we saw at the end of the same quarter last year. Now, as a firm, we do not give guidance, but as we've said in the past, the core fundamentals of the business are strong, and the robust growth, the predictable growth, the profitable growth, which is the mantra that we've been trying to drive over the last 8 quarters specifically, is the course that we'd like to continue to be on.
Okay. The other aspect as far as the industry is concerned, Sudhir, is that a lot, and through the conversation with a lot of your peers too, what is emerging is the fact that there has been a talent crunch, which is leading to rising people's costs. My question to you is, what is your observation in this case, and has that had any impact when it comes to margins for NIIT Technologies?
So, Agam, I think it's a reality that there is a fight for talent, in some ways a war for talent that one keeps reading about and talking about all the time. If you look at us, we have very successfully in the last 4 quarters managed to increase our workforce by significantly north of 10%. Now, getting back to your immediate question, is there a crunch for talent? The answer is yes, but I think we've been able to manage the ask in terms of onboarding people and in terms of reskilling people, largely because of our legacy as a firm that started off more in the training and education space and the training engine that we have, and B, by doing, we believe, what we think has been an outstanding job in terms of maintaining the operational rigor around hiring, training, and running delivery operations. So as we've said in the past, the margin numbers that we've secured, and our margin numbers for mid-tiers are best in class, are numbers that we think we should be able to maintain.
Sure, Sudhir. I'm sure there'll be a lot of curiosity when it comes to bearings, considering there has been a change at the top. Of course, these are early days, but if you could give us any indications from bearings whether or not there could be a change in strategy going ahead.
Not at this time, Agam. All the conversations that I've had and we've had as a group with the bearings team leads us to believe that they continue to be committed to driving value for the organization by helping us and working along with the management team, and they've talked about this, to ensure that we continue to drive growth, profitable growth. So at this point in time, every signal we picked up is that they are happy with the strategy that we pursued, with the tactics that we pursued. And of course, we're looking forward to working with them, getting guidance from them on any changes that they might consider. At this stage, we are not aware of any.